Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Monday, 19th of January, Martin Luther King Day. This is my disclaimer. I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, so I'm not here to shoot trading signals. This is a video for paying subscribers at CTM The Bigger Picture substack.com. It's published on YouTube after a delay of a week. Okay, well, we've certainly been having an interesting weekend. Obviously, Trump is threatening to take over Greenland by force and is pressuring the Europeans to give it to him, and seems to be under the impression that might work, which I fear is mistaken. We have seen some pullback on the markets, but what I would say is that here on ES, we're coming back, we're testing the monthly pivot at 68.8650, more or less a perfect test, and we've got a 60-minute buy signal fixed, and we've got a 6-minute buy signal fixed on NQ. We've got a week 6-minute buy signal fixed on RTY. We've got a 60-minute buy signal fixed on YM. If you're wondering why one's weak and one's not, when it's all about whether it comes back and tests this level at 30 level, which it didn't on RTY, but it did on YM. And on DAX, we've got a 6-minute buy signal fix, and on ESTX, we have another 60-minute buy signal fix. So generally speaking, this is bullish. So, and I would expect to see at least a decent rally while those bicycles play out. In terms of the pattern setup here, looking at ES, we've got obviously could be forming a head and shoulders here, although I think it's a little early to think that we are. I do think that potentially we've got a lot of market turbulence coming down the line. We've got this whole Greenland thing. In the event that things don't go well in in Congress over the next few days, my understanding is that we may see another government shutdown starting, possibly over healthcare again, on the 30th of January, or at least at the end of January. So, I mean, obviously there are serious concerns in the event that, well, personally, I don't think Trump is crazy enough to invade Greenland. And if he did, I mean, I think the polls are suggesting that something like 4 to 5%, 4 to 6% of Americans would be in favor of invading Greenland, which is a very, very low number. And I have to say, Trump's got a lot of crazy policies. Generally speaking, he's got a pretty solid base of 30 to 35% of Americans that will back him no matter what he does, but not on Greenland. This would be a pretty unpopular policy all around, particularly with Americans. So I wonder, I mean, you have seen a lot of the Trump administration coming out and backing up Greenland, but the question is, do they believe it? And 3, do they think they can get away with it? I think this might actually, I know one Republican congressman actually threatened to back impeachment proceedings against Trump in the event that he invaded Greenland. I think there would be a lot of blowback, and I don't think this administration is quite ready for that level of it. I think it might mean that, in effect, they lost control of what has so far been an extremely compliant Congress and Senate, and that might change. And it might make Trump even more unpopular, much as that seems hard to achieve. All right, great. Let's have a look at ES, possible head and shoulders, maybe. NQ, this kind of looks like a bull flag forming. It's not a great bull flag. I don't think this trend line here is anything to write home about. Yeah, not awful. I mean, it's a maybe. I haven't drawn it in as a flag because I'm not convinced. But neither am I convinced by this downtrend. We're below the monthly pivot on NDX. This has obviously been the weakest, but 60-minute buy signals across the board are generally a buy and expect a decent rally, subject to obviously more crazy stuff being announced, which obviously at the moment is quite a risk. RTY, we've seen a little break in the uptrend here, but obviously this has been having a very good January so far, and we're just seeing a bit of a pullback of that so far. YM, we've really been going sideways since the early January high. We have a potential level top here, and it's quite nice. It's currently showing no sign of breaking down. This is looking like a bullish consolidation more than anything else at the moment. DAX and the STX both made some pretty decent looking highs, new highs, and both seeing a bit of a retracement here. This may well be a flag on DAX. And we had a little double top here. It actually broke down and played out so fast. I didn't have a chance to actually put in the targets, and it seems kind of pointless after it's already made the targets. But I mean, I might add the arrows later, but that's already seen a significant retrace. Again, we could be forming a head and shoulders here, but there's no particular reason to think that we are. All right, let's have a look at those on the bigger picture charts. And right, looking at ES. Now ES obviously has this updated. I don't think. Has this got the latest days trading? What's that got it at? 69.60. No. So because obviously that was from last night. I was thinking that might have updated, but obviously it hasn't. But here we've got nice looking rising wedge, and that has actually overthrown and broken down. I am wondering if we might be topping out for a larger retracement here. We will see. On SPX, we've again got a nice looking little rising wedge, and that's seen a slight break below that there. And again, we could be topping out. Short term, I am wondering about seeing some more retracement, and traditionally the second half of January is weaker, and to be honest, there's an awful lot of clouds around at the moment. There's the Greenland thing, obviously the US economy really is in the toilet, and there's not much sign of that changing anytime soon. Trump is now saying that he's going to be tariffing, going to effectively economic war against the rest of NATO unless he gets his way on Greenland, which seems most unlikely. There's more economic uncertainty there. So to be honest, there's plenty to have a retracement about, and I'm wondering whether we'll see that. These short-term wedges are suggesting that we may well be topping out for that, but we could see another high retest first. We'll see. Looking at the hourly chart, no current divergence. 15-minute chart, not a lot to see, but it's very nice looking rising wedge from the November high, and that has overthrown, and then it has broken down. Now it could just continue higher, but what I'm favoring here is we're probably going to retest this high, set up a double top, and then we'll see whether we get a larger retracement. All right, looking at the Qs. Qs, we're testing the daily middle band again. It's been testing it a lot on the Qs, which have been the weakest. In terms of pattern from the low, nothing as certain here. Doesn't really look like a triangle. Doesn't really look. Could be a triangle, I guess, but it's not a decent triangle. We've broken the rising support from this low. Do we have an obvious setup here? I've got to go with not really. We will see how it goes. But not really seeing anything convincing. This would be, if we can get back up into a retest of the high, and we could be setting up a decent looking larger double top. But I have to say it's worrying also for the health of the overall market that we are seeing. Healthy overall market that we are seeing the Qs being the weakest. In fact, actually, since I was talking about making new all-time highs back in December, the Qs are the only ones that haven't made new all-time highs. Looking at Dia, where we've seen new highs with quite a lot of confidence, we've got a lovely overall wedge here, and we've actually hit resistance on it. I am wondering whether this might turn out to be a double top that plays out, but this would be a very obvious time to reverse. We've also got an RSI 5 sell signal fixed here, which is the only one we've got on the daily charts. Could we get some forming in the event that we retest the highs? Not on SPX because we went below the 50 level. Not on the Qs for exactly the same reason. And so we've only got Dia, and it may be that we're only going to have Dia. I think IWM potentially could form one. We'll get to that in a minute. Hourly chart here, no current divergence. Nice looking double top here, but at the moment it's been very, very clearly not breaking down. In terms of the pattern from the November low, this is a nice looking rising wedge, and the obvious next target is this wedge support, and this is which is pretty close to the double top support at the moment. So we will see. If we see a break through both, then potentially we are starting a larger retracement. Okay, let's have a look at those on the IWM chart and IWM. On the daily chart, do we have a decent looking pattern from the April low, not an overall one, no, but we do have the nice initial wedge here, and we've got a very decent looking wedge, but it has overthrown from the November low. So this, I was thinking, it looked more like retracing when we were here, but I mean, this could just be a sizable overthrow. We'll see. But it may be that I've drawn in a couple of possible alternate trend lines. They're not the only ones, but where this could be heading. But at the moment, this doesn't look like any kind of significant high. In terms of the hourly chart, 15-minute chart, that's the way I've drawn it in. This was the very nice original wedge resistance, but obviously we seem to have blown through that. This is the next obvious trend line. I've got that currently up in about the 269 area, and I'm thinking if we do see a move up and retest the highs, then that's the target I'd be looking for on IWM. In terms of DAX, no current negative divergence. We're seeing a bit of retracement here. Doesn't look as though it's going to get us anywhere close to the daily middle band at the moment, with a buy signal fixing here on the hourly chart. On Nikkei, we saw it blew up through the previous high at 52.6 after the bullish triangle broke up. No current negative divergence, but this pullback and a retest of the high could set up a negative a daily sell signal there, and we could of course get one on DAX as well. Right, great. Let's have a look at the dollar. Okay, dollar. We've now reached the target pretty much. I mean, it wasn't actually quite make the full target. You can see it was just below, but to be honest, it was close enough for me to call it. So I've called that as reached target already. And I'm wondering, and I'll talk more about that in terms on the daily chart when we get to it. I'm wondering about a possible reversal here. We will see. We do have a little top, which I haven't marked in, but it's broken down with a target maybe in the 98.625 area. And I am thinking this could be a double top. So we could see, if it can't get higher than this, we could see quite a sizable reversal. Looking at the other currency pairs, EURUSD, we don't have a reversal pattern pointing back up, but we have now very much made the initial double top targets. So GBP USD, we broke down for a double top here, but we've not really made any progress towards the targets here, and I'm wondering whether we are just going to reject back up into the high, and that is a real possibility. USD JPY, when before we saw this rally on the dollar, I was saying we had unfinished business at a retest of this high. Obviously, we've much more than made that. This looks like a flag, though, which would be dollar supportive. It looks like a bull flag, which is breaking up. We will see. USD CAD. Potential little level top here, which would fit with dollar going down if it breaks down. But we do still have an IHS target above in the 1.405 area. Australian dollar, possible head and shoulders forming here or double top, and NZ broke down from a double top, which may be failing. So I've got that, as a double top, not a head and shoulders, so it wouldn't fail on a move over this level here, but it could just be a rejection back up to the high. That wouldn't be unusual. All right, let's have a look at those on the bigger picture charts. And okay, US dollar. First thing to mention is here on the daily chart, we've got a possible. Okay, we had a possible RSI 5 sell signal brewing. It's now fixed, and that means that is favoring the downside. Do these things normally make target? Well, they don't always. There's a failed buy signal there and there on the RSI 14, although, to be honest, it's very rare to get daily buy signals on the RSI 14. We've got 1, 2, 3, 4 previous buy signals which made target. We've only had one sell signal, but that made target too. So yeah, I'm taking it seriously. So we've got an RSI 5 sell signal fixed there, and I'm thinking that may well make target. So we will see how that goes. But sorry, I'll just mark in the arrow here while we're looking at the chart. But I'm thinking, having made these targets ready to the upside, I'm wondering about some downside. And it could be that what we'll do is we'll do a full reversal of this last move that we have made. All right, so so we will see how that goes. So let's have a quick look at the bigger picture chart here. Obviously, we've got this big double bottom that's broken up. We would need to get back over 139 and keep going for that to be really on the table. Potentially, that gives us a path over to 104, 10 to 15 area. But I got to say, more like 1020 to 35 area actually. So, but the real problem I've got with that is that the government, the US administration, is doing absolutely nothing to bolster um, any faith in the dollar. And the problem is, if he does impose tariffs and gets into a higher grade trade war with Europe, and well, basically with the rest of NATO, then there are issues there, and most of the issues there are to do with bonds. But to be honest, bonds and US dollar are linked. It's all about being the reserve currency, and what happens. Well, one of the reasons the US has had a very persistent reserve currency was because it has been the leader of a large coalition, which is the coalition it's starting a trade war with at the moment. Now, obviously, the advantage of attacking your allies is they tend to be surprised at the very least. So you have that advantage. But the disadvantage is that if you were relying on them for anything, and one of the things they do is they hold large amounts of US debt, they own large amounts of the US stock market. In the event that you start having a forced separation of your economies, then trade goes down. They stop holding your treasuries, your interest rates are liable to go up, all sorts of nasty things that start to happen. And actually, this is something that I hadn't really thought of as a possibility because I didn't think Trump would be this crazy. But if he is this crazy, and if we go down further down this road, then, well, that's going to be a problem. All right, looking at the euro. The euro, we had an RSI 5 buy signal brewing, and that's now fixed as well. So that is a significant pointer that the dollar is about to take something of a hit. It hasn't meaningfully taken that so far, but it is suggesting it's coming. We don't really have the same thing on the GBP chart, and I think that's really it in terms of real support for that happening. Have you got anything on CAD? Yeah, we had a sell signal brewing on CAD, and that's fixed too. So we've got a sell signal on USD and USD CAD, and we've got a buy signal on EURUSD, and all of those are pointing towards the dollar going down, at least for a modest decline. Doesn't need. It could just be a retracement of this move up, or it could be a full reversal. We will see. But the more, well, I think, I don't think it would do good things for the dollar at all if Trump was to send troops into Greenland. Because I don't think, I think I was watching Stephen Miller on the news, and he was saying, oh, well, no one's going to fight the US over Greenland. And actually, in terms of a shooting war, I think that's probably right. I think it would be a trade and economic war. And there, well, in a military war, the US has got all the advantages. In an economic war, well, actually, it's surprisingly vulnerable. If there was enough of an attack on the status of the dollar and on US debt, then actually you could find there was started to be a very, very serious problem. I've been talking. Well, I'll get to bonds now, but I'll talk about the bigger picture on there. And it's something I've said before, but I'll just reiterate the risks of losing your friends on bonds. Okay. In terms of the ZB here, I've been talking about this as a likely bear flag megaphone forming, and that megaphone has broken down. That's got a target to retest this low, and on the bigger picture, a large head and shoulders has broken down on ZB with a target in the 112.04 area. I'm thinking that's going to make target. We do have a weak 60-minute buy signal fixed here. I think we're going to see a bit of a rally, but bigger picture, I think it's going down. ZN. That actually, we had a consolidation triangle here, bearish consolidation triangle, and that broke down. It made the target, minimum target, the retest of the prior low, and has continued down. Here, we've got a double top, which is broken down with a target in the 110.17 to 110.12 range, and that is significantly below still, as the target on ZB is. And I think I'm thinking pretty. I'm liking the chances of making target. And I have to say, treasuries have been reacting far more strongly to the Greenland situation than anything else. And that's because foreigners own actually something like $10 trillion worth of US treasuries. Now, the EU doesn't own all of that. I think it owns probably at least 2.6 to 3 trillion of it. That's actually quite a lot. And they probably own another 10 trillion in the US between pension funds and so on in the US stock market. In the event that tariffs start going up on both sides, and the US went into Greenland and got sanctioned by the Europeans, then at that stage I think that would reduce a lot. That is the nightmare scenario, which could potentially cause a major stock market crash and send US interest rates to 10%. So, and to talk more about that, let's go over to those bigger charts too. Okay, a moment, let's close down a couple of groups of charts to save memory. Not the US here, because after we talked about bonds, I'm going to come back to that quickly. Okay, looking at TYX, this is the 30-year yield. This looks like a bull flag, which is breaking up. We've got an IHS target up in about the 50.1 area, and the flag target, if this is a flag, and I think it probably is, actually has a target up at a retest of this high here at 51.53. On the bigger picture, I've talked about this regularly before. This is a potential inverted head and shoulders forming here and thinking about breaking up. We've been staying pretty close to the neckline. In the event that it crossed it and got over 6%, I think there's a pretty good chance we might get to this IHS target in the 9.5% area. And that would have 30-year yields at 9.5%. Now think about that. That's actually the basis for government borrowing in the US, but it's also the basis for all long-term borrowing in the US by corporations or individuals. That could have a major impact on the economy. In fact, it could make the wild ride of the last year look like a fairly modest warm-up. That could be a big problem. And also, if it was going up to 9.5%, that would be basically people demanding more of a risk margin, because there's currently no plan in terms of what is going to happen with the US national debt, how it's going to be paid down, how it's going to be kept at sustainable levels. There is no plan at all. It is going up at an accelerating pace, and that's going to be an issue. And if it wasn't for the fact the US is the reserve currency, it would already be an issue. In fact, any other of the big Western countries, if they were playing with silly buggers on this sort of level, would have had their interest rates go up considerably already until they made a plan. And similar little crises have happened in European countries on a regular basis. So we will see. We will see. But that is the bigger picture on it, and that is a warning. TNX, we've got another IHS which is forming. It could form for another year or two. I think it's going to, unless some sort of plan occurs to get some sort of rein on the US national debt rising, then I think there's pretty good chances will break up at some point, but it doesn't need to be now. But I am wondering about it. In terms of the bigger picture here, on TNX, on the weekly chart, we've got what looks like a consolidation triangle. On FYX, we've got a consolidation triangle. These are bullish triangles of exactly the same kind that broke down of the type that broke down on ZN and delivered the low retest. The target for this would, of course, be the high retest here at 49.88. Not coincidentally, that would basically complete the inverted head and shoulders. I don't know if there's actually an inverted shoulders on FYX, but that's what we'd be talking about on TNX. And short term, on TNX, we have an IHS which is broken up with a target in the 43.85 area, and arguably we've got another one, but it's not as good an IHS, so I'm just going to stay with my original one with that target, although the other target would be a bit higher. So here we had a consolidation triangle that is broken up, and then of course this is the mirror image of the ZN chart, because this is the TNX chart and this is the 10-year yield, and ZN is the 10-year future Treasury future. So that's looking good. It's broken up over this resistance at 42, and I'm liking the chances of it getting up here, particularly with all the rubbish that's happening politically at the moment. In terms of TLT, that's a less clear picture, but these aren't government bonds; these are corporate. Shorter term, though, we do also have a pattern that's broken down there. We've got this very nice head and shoulders, which is broken down with a target in the 84.7 area. I'm not seeing any reason to think that won't make target. We will see. All right, great. Let's have a look at the dollar again, because I said I was going to come back to it. And I just wanted to talk a minute about the bigger picture on the dollar. Now, I've been talking a lot about this bull flag set up here and how it could break up and do a high retest, and that would likely be the second high of a double top. Why do I think it would likely be the second high of a double top? Because since since we saw the big lows in the 2008 to 2011 area, we have been forming this large rising megaphone. And normally, with one of these, you will normally see a breakdown at some stage. And we had a very slight breakdown here a few months ago. You will see a breakdown at some stage. Then you will see a topping pattern form, which is why I'm looking for a double top. And then you will see a breakdown. The double top would get us back into the 80 area. If the flag breaks down instead of up, that would get us back into about the 80 area. And of course, if it goes back and does a full reversal of this move, then that could get us back down into the 70 area. These are big moves, and it's a while since we've really traded any meaningful amount below 100. In fact, we've not really done that for... Yeah, we got under 100 for a bit in the 2020 area, but otherwise it's really been a while. So overall, I'm thinking that this is a bearish setup for the US dollar, and I'm expecting to see it at 80 probably within 5 years. Doesn't need to be soon, but if the administration does something which breaks this down hard, then, well, 80 would be my target. So I'm waiting to see whether that happens. But I think when we had, hang on, where are we looking here? Right, back in October 22, USD broke the channel resistance and is testing a possible alternate megaphone resistance trend line. Perfect reversal at that trend line. This is a really, really nice high quality pattern. Sooner or later, I'm expecting this to deliver and move to 80. We shall see. Okay, great. Cool. Right, let's close that down and then let's move on to energy. All right, oil. Now, in oil, I've been watching this possible head and shoulders here, and that head and shoulders actually is broken down and may be rejecting back up. So watching that with interest. Sorry, I haven't marked that in yet either, but that's got a target back down to about the 55.50 area. So that head and shoulders is suggesting a low retest. But if we reject back up, then that takes us up into the 62 area. Now, I've got more to say on the bigger picture chart here in terms of the overall picture. On HO, we've got, we broke up from, well, I've just rolled all these into the March contracts, and the setups have changed slightly as a result of that. So this hadn't made the target, but now it has, because of course we're now in the March contract, and this IHS has broken up and has made that target. So we don't have anything further to the upside. We do have a 60-minute sell signal fixed. On CL, 60-minute sell signal reached the possible near miss target. RBOB also reached it, and again we've got another possible head and shoulders forming here, although at the moment it's not breaking down. I think we've got an inflection point here where we could head back down and retest the lows, or alternatively we could head back up and do some damage to the upside. I'm not seeing a strong reason to think we would see that to the upside, but I do see a setup for doing it. On NQ, I'd drawn in this I'm not sure I'd drawn in the wedge by last Wednesday, the webinar last Wednesday, but I had drawn it in. I was talking about it in the morning webinars, and this has now broken up since I drew it in and said I thought this looked like a rather convincing looking falling wedge, and that's now broken up. So I think we're going to see a bit of a rally here. Not sure how far that's going to get, and I don't have an obvious reversal pattern, although if we see a bit of a pullback here, which we might, then we could be forming an IHS to take us up, it'll say, into about the 4.4 area. All right, let's have a look at the bigger picture charts on those. Okay. On WTIC, obviously we've had these wedges for ages, and I'm looking for reversal patterns here, and there is an argument that we've actually already got those. On WTIC, this would be a double bottom, and actually this here is a double bottom too, which hasn't broken up yet, but could see a break up over the next few days. You can see that we're testing here at 62, the 200 DMA at 62.29 tends to be a pretty good resistance level, but we could see a break up from it. That would be a break up from a double bottom here too, and that would have a target in about the 70 area. Then, of course, we've got a larger target here. If this breaks up from this larger double bottom here, a break over 78 would look for a target in about the 101 to 103 area. Am I seeing a good fundamental reason to think that might play out? No, but the good pattern setup does need to be respected. It could happen, and maybe we just don't see why yet. On heating oil, again, we had an IHS here which broke down, and normally that would retest the low, but there is an argument that this could be, and I've drawn in, sorry, I'm not on that chart, on this chart, I've drawn in a possible alternate inverted head and shoulder neckline, and actually it's not bad, because the left shoulder low was at 2.042, and the right shoulder low is at 2.047. That's very close. And that makes this actually a very decent looking IHS. And this broke up. If this broke up, that would have a target, I think, well, it would have the target basically up at a full reversal back up into this high here. And that would be, hang on, right, when was that high there? Late 23. That would be this one at 3.42. So yes, yeah, because really that's the short-term pattern, although I don't know, there is an argument that it's coming from here, and actually it could go higher. I think the full target would be in about 3.5 area, but the point is we could have we could have a viable reversal pattern there too. Do we have one on gas oil? Yes, we do. We've got this flag which broke down, retested the low. Is this a potential double bottom? Yeah, it is. And it wouldn't be a bad one. So it could be we're about to see a sizable rise on oil. Can I see any reason why we would see a sizable rise on oil? No, not really at the moment. But that doesn't mean we're not going to get one. And it is an encouraging pattern setup. We'll have to see how it goes. All right, looking at natural gas. Now, natural gas, I haven't rolled this into March yet because most of the traffic's still in the February contract. But here we have this very nice looking falling wedge that has broken up now, but it hasn't fed through to this. There's a lag. I'm getting to these EOD shots, but this falling wedge here has now broken up. What I was writing here was a rally looks close, and well, a rally as it appears started. We might still be bottoming out, but I'm looking for it's been a very, very steep and stiff move down, and I'm looking for maybe a 50 back, get us up to 4.2 possibly, and then probably a reversal lower. We shall see. All right, and we have got, supporting that, we've got a daily RSI 5 buy signal fixed. Okay, let's have a look at metals. Okay, looking at GC. We have little head and shoulders that formed, that broke down, it rejected quickly, and it's delivered a higher high, but there is another side to that which I want to talk about, which is that we're now setting up. I was saying when we was talking about I was talking about there's quite a lot of pundits talking about a larger reversal here, and I was saying if we were going to do that, the obvious thing to do would be to go and make new all-time highs, and then we might see a lot more negative divergence. We've done that, and we've got it. Not on the hourly chart. I'll be showing you on the bigger picture. But actually, we've got a pretty decent looking pattern set up to see a larger retracement here. Is that going to deliver? Not necessarily. Have we seen quite a lot of daily sell signals fail? Yes. But it is more of a risk now than it was. Silver has made it up almost to 95. Amazing run. Doesn't look a bit overdue for a retracement. Well, yeah, obviously. We will see. I'm liking the possibility of a retracement here, and we do have potentially some topping action here. Palladium, we've got an IHS which is broken up here, and it hasn't made target yet, and I'd quite like to see it make target. That's broken up with a target in the 2010 area. We will see. Could we be forming an IHS to get us back into these lows? Potentially, yes. Platinum, we've got an IHS which is broken up here with a target at a retest this high here and about the 25.45 area, and I like that one. Do we have a potential level top here which could get us back into the lows? Yes, so we will see. HG, I was talking when we retested this high, it could be the second high of a double top. It still looks like a very, very viable second high of a double top, rather more so than it did then. So I'm thinking if we are going to see a retracement on metals here, this wouldn't be a bad time to see it. Let's have a look at that on the bigger picture chart. And on gold, on the daily chart, hang on, we've got because of the retest of the high, we've now got a possible RSI 14 sell signal brewing. Do we tend to have many of these? No, we don't. It tends to be mainly on the RSI 5, and we haven't got one of those at all at the moment. But nonetheless, I have seen these deliver decently in the past. Not lately, though. We will see. In terms of the weekly chart, we've got quite a lot of negative divergence. We've got a weekly RSI 5 sell signal fixed. We've got an RSI 14 sell signal brewing. And these actually do tend to make target. This one here made target. This one here made target. This one here made target. This one here failed. This one hasn't actually fixed, and if it does, it might fail, but we might be looking at a sizable consolidation. And to be honest, we have made a big move since we last saw such a consolidation. Maybe it is overdue. We'll see. Looking at silver. On the weekly chart, we've got sell signals brewing, decent RSI 5 sell signal here, possible weak RSI 14 sell signal. Hasn't fixed yet, but it's in the mix. Possible RSI 14 sell signal fixed here. The last two of these have failed, I would say, although both of them were weak. This last three of these have failed, actually. This one here made target, but it's not an awful lot to hang your hat on, really, in terms of historical reliability. And to be honest, well, these last three all failed while we were on this wild spike to the moon. But we'll see how that goes. I'm slightly skeptical, but there is a decent setup for some sell signals here. Looking at palladium, we've already got an RSI 14 sell signal fix and an RSI 5 sell signal fix. Looking at platinum, we've got a weak RSI 14 sell signal fix, and if we can manage to retest this high here, which is currently looking a bit doubtful, then we'd get a full size one brewing. We've also got a weak RSI 5 sell signal, which is fixed as well. Looking at copper, on the daily chart, we've got an RSI 5 sell signal fix and an RSI 14 sell signal fixed. This is backing up the double top setup on copper, and it is backing up the large amount of negative divergence we've got across the board on the metals. I'm seriously thinking that we might see a decent retracement here. In terms of GDX, weeklies on GDX and GDXJ, we've got quite a lot of negative divergence. On the daily charts, not so much. We got an old RSI 14 sell signal fixed on GDX. On GDXJ, we do have, if we didn't already have an RSI 14 sell signal fixed, we'd have another decent looking one brewing on the RSI 14. Is it that compelling for a reversal right here? Not really. So hourly charts, I'm not really seeing much to suggest we're about to reverse. We will see. But I am definitely wondering about it, and it wouldn't surprise me if we were to see that retracement. All right, let's have a look at the coffee chart. Okay, coffee, we've broken slightly below this rising support trend line. Not sure what to think about that. We do have a potential double bottom here. I'd be a bigger picture. This is quite a long way out of its long-term trading comfort zone. Obviously, there are issues with like crops and so on and so forth, but bigger picture just on the charts, I'd be leaning towards more downside. Looking at sugar. This looks like a flag which is either still forming or is broken down. At the moment, I'm thinking leaning towards the may well still be forming category, because that was a big rejection after we saw this initial breakdown. On CC, we have gone back, retested this low here. 60-minute buy signal is fixed, hasn't made target yet. Not really impressing me with the strength of the rally so far. CT, we broke up from a double bottom with a target in the 66.8 to 67 area, and we have been consolidating since. It looks like a bullish triangle at the moment. So I'm still leaning towards at least another crack at making this target. Looking at lumber, we've broken up from this double bottom I was talking about. I wasn't that enthused about it, but it's broken up nicely. Could fail here, of course. A lot of patterns do fail just after the break. And we've got a weak 6-minute sell signal fixed low and a full size one, which is also fixed now, actually. So I'll change that. Hang on. So we've got a 6-minute sell signal fixed there. That isn't necessarily going to change much, but I am thinking that this wouldn't be a bad time to see a pullback, and of course that could deliver a full reversal. We will see. So bear with me a second. Just need to redraw this arrow. All right, sometimes it behaves better than other times. Alrighty, there you go. All right, let's have a look at ZW. ZW, we had a double bottom that broke up here, rejected very hard, and has now almost come back up. This might have a shot of playing out, actually. Got to say, the rejection was so hard. Normally, I'd be looking for failure there, but at the moment, if it can get back over the monthly pivot and convert it, then let's have another try. On corn, this looks like a bear flag from the low, probably because it is. So unless we see a breakup from what looks like a pretty solid flag pattern here, then I'll be looking for at least a retest this low and possibly continuation lower. I still don't know what this decline was about, but obviously it was pretty sizable and has been persistent. On soy, possible double bottom here, and we are inching up towards the double bottom resistance. So we will see how that goes. No current negative divergence. We will see. Looking at ZL, we've seen a break up here. This did look like a bear flag forming, but it no longer does. We've already retested the prior high, so this actually has been some pretty strong action. It would have been nice if it had given us a decent reversal pattern beyond this initial head and inverted and shoulders, which actually failed. So, but sometimes you get them, sometimes you don't. Meantime, 60-minute sell signal is fixed, waiting to see if that delivers anything. Live cattle, I rolled this into April along with lean hogs, and it's always a good opportunity to see if there's anything new on the chart which springs out, because the trend lines obviously they change somewhat. Sometimes you're getting exactly the same, and sometimes new things spring out to you that weren't on the previous one. Here, we got a very nice looking rising wedge. This is a double top, which is trying to break down. We could see a large retracement here, and at the very least, I'm really wondering about a back test of the monthly pivot at 227.08. Looking at HE, nice looking possible rising channel here. If we can reach this trend line here and hold that as resistance, then this would be a channel. So I've drawn that in as a possibility. It was the best possibility I was looking at, although it won't be the only one. So we will see how that goes, but at the moment, still leaning towards more upside. Okay, let's have a look at those on the big picture charts. And coffee, as I was saying, bigger picture. This was pretty strong stuff by historical standards, and then we went all the way off and did this. And obviously, this has been particularly painful because tariffs went on to coffee as well for the US. So it's been very expensive to get coffee in the US this year. I think it was up 30%. So we'll see how that goes. We've got a potential double top here. Well, it didn't quite retest this high, and we've got a nice looking little double top here, which is perfect and has broken down and looks as though it might be starting to play out if it can get below this low here at 3.391, where we saw quite a strong rally. In terms of the daily chart here, no current divergence. You can see the double top here. It's pretty peachy, actually. And I'd be looking really for at least a move down to the 2.7883 area. But if we can get below that, then this is either a big bull flag forming or a double top that would be breaking down. Looking at sugar, where obviously we've got an open target down at 9, and we might be on the way over there. That would be 0.09 on this chart, with us currently being at 0.14, so that would be a decline of more than a third. So worth remembering. No divergence here on the weekly chart, no divergence on the daily chart, apart from a weak RSI 14 sell signal that fixed a while ago. Do we have anything that looks particularly bullish here on the pattern setup? No. So at the moment, the main target I'm looking at is that 0.091. Looking at cocoa, again, by historical standards, really went off and took a major price bender. This is looks as though it has ended. We broke below 64.27. We went back and back tested that broken support, and at the moment we have failed into a lower low. This is a potential double bottom, but overall that's generally not bullish. This would tend to be, I've drawn in the potential double bottom here, but this would tend to deliver lower prices. Watching to see with interest what happens here. No current positive divergence on the daily chart. Looking at wheat, no divergence, pretty close to retest the low, and I am wondering if we might get one. In terms of we broke up for a double bottom here, and this has been considerably more than you would normally expect to see in terms of a retracement. But watching this with interest, we do have a nice looking potential little inverted shoulders or double bottom here, and I'm wondering if that might break up. On corn, Corn, we had a pretty hard break, which got us back below the weekly middle band, and is in danger of ruining the short-term setup here. Bigger picture, this is still going to be a beautiful double bottom, and if it retests the low, it will still be a beautiful setup for a double bottom, unless we see it break significantly lower. But I am thinking we might be setting up for another retest, which would involve a move back to 368.75, which is a long way below. On the daily chart, no current divergence. This here, we've got an IHS which is broken up with a target 495 area, which fails on a move below 409.25. So I'm watching that level. We could be forming a head and shoulders here. Doesn't look like a double top. All right, looking at soybeans. Soybeans, the deal with China where they were going to buy lots of soy, which they didn't actually buy. Broke my bear flag here, and then we've basically retraced most of that. Watching to see what happens here. We do have an RSI 5 buy signal, but that's made a pretty good quick move to the possible near miss target. So it's no longer really in play. Do I have a larger reversal pattern here? No. Although if we were to form one, I'd be thinking about maybe a move to the 106.8 area to reach the possible IHS neckline, then a pullback, and then a move higher. So I'll be watching to see if that happens. Looking at cotton, still on a weekly weak RSI 14 buy signal. That is a fairly old one. We've got a beautiful double bottom here, which has been there for much of the last year. We are waiting to see whether anything will come of that. We've been trading sideways for a while. That could continue for a while longer. Looking at lumber. Hang on, I'm still looking at something. Okay. Looking at lumber, beautiful looking beautiful looking bear flag here, which has now been forming for 3 years, which is pretty impressive. For reference, this move from this high here into this low actually only took a year and a half. That's a pretty strong move. Well, year and 3/4. But so this has been a this is a bit long in the tooth as far as these patterns goes. I'd really expect it to have broken down by now. We have a nice looking flag target down in the 3.52 area, and that would be the retest of this low. And we've also got a double top, which is broken down with a target in that area. But we have been doing nothing to follow through. This could be a bear flag forming, and actually we've only retraced a bit over 50% of the last decline, but got to say, this wasn't the action I was expecting to see. We shall see. Bigger picture, this is still within a flag, and I'm very doubtful about this breaking up from that. But it's not really getting any traction to the downside. However, if we do see a nice looking sell setup as we go higher, I'll definitely be looking at that, because I think that could be a nice opportunity to get in for a short. All right, great. Let's have a look at crypto. Okay, now this has been just chugging along really for a few weeks. We've been seeing a bit of a rally here. I was looking at that, and I was talking about this is the ideal target. This trend line is the ideal target for Bitcoin, forming a bear flag, bearish overthrow, and we've seen a nice little decline. It hasn't broken down below rising support yet. We may still be forming a topping pattern, but at the moment that's quite encouraging. Ideally, what would I like to see here? I'd like to see a move down to 39.2k, which is the possible head and shoulder neckline, then a rally, and then a fail, which could get us most of the way back to the lows. I'm liking that. That's a good looking setup. We'll see whether it makes it. Looking at Solana. Solana, we were actually forming an RSI 5 daily sell signal, and that fixed and made target over the weekend, which was a little disappointing. So not that much use from a trading point of view. We had potentially a little double at the bottom here. I didn't mark it in because I didn't think it was a double bottom. I was thinking this was, well, I did think it was a double bottom, but I was thinking it was a double bottom that this would break up, get over 140. Sorry, it's actually about 146. It's not showing the correct double bottom high here. Resistance here, but we got over it, and then I was looking for a fail, and we have seen a significant decline. Do I think that we might see a rally from here? Yes. Am I expecting this to go a lot higher? No. I'm thinking that we're in the process of getting our way down to a retest of this low, and when we get there, we still got an open head and shoulder target down at a retest of this low here at 95.24, and I'd be looking for that. On Bitcoin, if we go lower, I'd be looking for a test of this big support area here, or getting close to it in the 74.4 area. And on Ethereum, Again, we got a head and shoulders. That's broken down with a target about the 2050 area, and I think we're in a consolidation here before we break down towards that. What kind of consolidation? Well, at the moment, it looks like a triangle. This would be A, B, C. So ideally here, we would go down to about the 2930 area, see a bit of a bounce, and then fell down into a retest of 2621, and likely continue on the way down to 2050. Obviously, just to remind you, my view is that the bull market in crypto has probably ended, and that we're looking at a 1 year to 18-month period of bear market before it turns again and starts slowly starts a new bull market. That would be, I could be mistaken about that, but to be honest, that would fit the chronology of the past couple of cycles, and at the moment, I'm not seeing anything to disagree with that. So really, I'm looking for this year to be overall pretty negative for crypto. And to possibly make a low at the end of this year or in the first half of next year. So that's where I am on the bigger picture. All right, great. In that case, I think it's a wrap. Everyone take care. I'll be doing the next webinar on Wednesday. And when you have a look at these buy signals here, be aware that we might be seeing a sizable rally starting overnight and into tomorrow. All right, cheers. Everyone take care. Catch you Wednesday. Cheers.